Hello my fellow investors and welcome back to another earnings report analysis. Today guys, we're going to take a look at the company Realty Income. They actually had earnings today guys. For some reason it was not on Earnings Whisper's picture, like image. For some reason it just was, at least I didn't see it, but it was brought to my attention by Stefan, where he pretty much commented on that community post that I made. He's pretty much just saying all eyes on Realty Income for me, and I didn't realize it guys, so I figured, you know what, let's actually analyze the earnings from Realty Income. So with that said, let's get started with this analysis. And coming over here guys to Seeking Alpha, we can see a brief overview of exactly what happened when it came to Realty Income. Realty Income FFO of 98 cents misses by 1 penny. Guys, really? That is absolutely crazy. Revenue of $837.3 million beats by $27.03 million. So that's actually fairly interesting, because the fact of the matter is guys, this misses and beats are based off of analyst estimates. And remember, analysts tend to change their outlook when it comes to a company's earnings like the last hour before earnings come out. So I don't necessarily trust this, but it is fairly interesting that they did miss by 1 penny and the revenue beats by $27.03 million. So now let's actually come over here guys to the actual earnings report, and let's see some comparisons to that of 2021. And of course I will have guys this earnings report link in the description below for you guys if you want to read it. It is very lengthy, it's around 14 pages long, so if you guys want to read it, please have at it. So let's actually get started with this. So we got here guys a couple of the company's highlights. Net income available to common stockholder was $219.6 million or 36 cents per share. Normalized FFO per share increased by 9% to 97 cents compared to the 3-month ended September 30th, 2021. AFFO increased 7% to 98 cents compared to the 3-month ended in September 30th, 2021. Invested $1.87 billion in 375 properties and properties under development or expansion, including $613 million in Europe. Net debt to annualized pro forma adjusted EBITDA 5.2x. Raised $0.7 billion from sale of common stock, primarily through at the market ATM program, with a weighted price around $73. So it's actually interesting. So right here they're saying guys that they raise income, right? They raise capital by selling essentially their shares. That's part of the shares outstanding, and you can see that they were selling guys at $73. If you guys know the price right now, you can pretty much see that they made a, I guess, pretty good investment by issuing shares at $73, seeing that today I think it's like at around like $60 or so. Declared the 100th consecutive quarterly dividend increase in September, representing 5.1% increases. Wow guys, 100 consecutive quarters of dividend increases. Here for Realty Income. This is the reason why I absolutely love this company, and why I absolutely love to sell cash secured puts on this company in the future, because man, that is absolutely insane. Guys, 100 consecutive quarters of dividend increases. What are the chances of them stopping now, right? What are the chances of that? And now coming over here to the CEO comments guys, let's read on exactly what the CEO actually has to say when it comes to this. Quote, "I am pleased with another well-executed quarter by our team," said Summit Roy, Realty Income's President and Chief Executive Officer. "We strive to be judicious and disciplined capital allocators, investing in high-quality real estate leased to leading operators that can thrive in a variety of economic environments. During the quarter, we invested approximately $1.9 billion in real estate at a cash cap rate of 6.1%, bringing our total to $5.1 billion year to date. Additionally, we enhanced our financial flexibility by raising over $2 billion of equity during the quarter, $1.3 billion which we intend to settle in the fourth quarter at $66.70 per share, while further de-risking the balance sheet with a $750 million 10-year bond offering in October. Finally, the operating fundamental of our business remain healthy as we finish the quarter with occupancy of 98.9% while registering a rent recapture rate of 108.5% on properties released. We are fortunate to manage a consistent business model that provides dependable results and believe we are all positioned to continue generating long-term value for shareholders." So overall guys, this is actually looking fairly decent. You know, they gave okay guidance, I guess you could say. You know, I wouldn't say like amazing guidance, but they definitely are looking towards the brighter side to the future, even with the economic headwinds. So let's come over here guys to page 2 and make some of these comparisons when it comes to these fundamentals. So we got here total revenue 2021 $489.9 million. 2022, $837.3 million. Net income available to common stockholders, guys, $135 million to $220 million. FFO, funds from operations, available to stockholders, guys. Take a look at this. $332.3 million to 2022 of almost $600 million, guys. I also just realized that they also give it in the per share kind of way. 85 cents per share in 2021, guys, to 97 cents per share in 2022. Absolutely amazing. Normalized funds from operations, we got $349.1 million in 2021 to $601 million, 89 cents per share to 97 cents per share. Adjusted FFO, we got 356.8. Let's just bring it up to $357 million to $604 million, 91 cents per share to 98 cents per share, guys. In every single one of these things, they beat, which is again very, very surprising, because if we come over here to this article, guys, the FFO of 98 cents misses by 1 penny, even though over here clearly see that the FFO did fairly good, guys. 85 to 90 cents, that's a massive increase. So this is why I don't like listening to analyst estimates, because, you know, I like to look at the actual increases when it comes to a company. Essentially, that is what I'm getting in return. And actually, guys, if we come over here to page 6, we can see the earnings guidance. Summarized below are approximate estimates for the key components of our 2022 earnings guidance. So they actually have changed this a bit over here, some for the worse, some for the better. So we got here net income per share, guys. They went from $1.14 to $1.27 to a revised now of $1.07 to $1.15. So they did go down when it comes to their guidance when it came to their net income. The AFFO per share, as you can clearly see right here, guys, it went from $3.84 to $3.97 to $3.87 to $3.94. So one of them went up slightly, then the other one slightly went down. No, it's okay, I guess you could say. The normalized FFO per share went from $3.92 to $4.05 to $3.99 to $4.07. So that one actually went up a significant amount. And if we actually come over here between page 2 and page 3, they do have a little bit of notice when it comes to their dividend. I kind of want to read this, guys, because I mean, Realty Income is just, I mean, you buy for the dividend. It's just an amazing company, amazing monthly dividend payer. So let's actually read on this. In September 2022, we announced the 100th, I'm going to make that, by the way, the title of this video, 100th consecutive quarterly dividend increase, which is the 117th increase in the amount of dividends since our listing in the New York Stock Exchange in 1994. The annualized dividends amount as of September 30th was $2.97 and 6. Okay, I don't know really how to read that dollar amount, but let's just bring it up to $2.98 per share. The amount of monthly dividends paid per share increased 5.1% to 74 cents as compared to 71 cents for the 3 month ended September 30th, 2021. Guys, that is a massive. So in 1 year, hang on a minute. In 1 year, we got an increase of 5% just on Realty Income alone. That's really solid. Now, I know that's not beating inflation, right? I know that's not beating inflation, but still 5%, guys. How many of you guys at your jobs get a 5% increase on your raise in 1 year, right? That barely happens. You might be lucky to get like 2, maybe 3. That's about it. 5.1% with Realty Income, guys. This is really solid. We distributed $458.6 million in common stock dividends to stockholders during the 3 month ended September 30th, 2022, representing a 76% of our AFFO of $603.6 million. So overall, guys, I mean, I love Realty Income. They had a pretty good earnings report. Now, how did this actually translate when it came to their stock? Well, it kind of just went nowhere. Essentially, throughout the trading day, we could see that it went down around almost 2%, $1.14, and post-market, after the earnings came out, they only went up about 3 pennies. Now, a lot of stuff happened today, obviously, with the interest rates hike that Jerome Powell came out saying that they're going to increase rates 75 basis points, i.e. 0.75%. So that essentially destroyed the market, because there was a lot of hopium going around that maybe Jerome Powell and the Fed are going to pivot, right? The whole pivot game just brought the market way up, like within these past couple days. And now we're coming back to reality, and Realty Income is definitely going to come down to reality too. So I think we're finally starting to see the disconnect, guys. Well, at least we're getting further into this disconnect when it comes to a company's fundamentals and the company's share price. The share price is going to fall, but their fundamentals are going to keep doing good. So this is exactly what we want to see, because as you can clearly see on the 1 year, guys, Realty Income is down 12.39%. Year to date, 14.23%. 52-week range is of $55.50 to $76, guys. I just showed you $61.07. It is the current share price. So again, this might be a fairly decent price to buy it at. Now, when it comes to REIT company, guys, we can't use discounted free cash flow. We have to use FFO and several certain ratios when it comes to this. So let's actually do this right now. We got the ticker symbol of O, market cap of $37.7 billion, the current share price of $61.07, current FFO, guys, of almost $2 billion, AFFO of $1.5 billion, and an annual dividend of $2.98. This annual dividend turns out to be around 4.78%, which is a payout ratio of 275.19%. Obviously, not in regards to their FFO and AFFO. We saw that in their earnings report that it makes up around 76% of their current AFFO. 5-year CAGR of 4%. With 25 consecutive years of dividend payment, and today marked their 100th consecutive quarter. So all that's looking really, really good. They do pay their dividends quarterly, guys, and unfortunately their ex-dividend date passed as of Halloween Day, so October 31st. They do pay out the 15th, but because they pay monthly, guys, essentially just wait up until November 30th and you can essentially get into the next dividend, right? You can essentially get into the next dividend payment. So all of that's all good and dandy. Now, based off of the current shares outstanding, guys, they pay out $1.84 billion in dividends every single year. And as you can clearly see in regards to their FFO and AFFO, the payout ratio comes out to be, guys, 98.49%. And based off of their AFFO payout ratio, it is 123.62%, which is fairly in line with what REITs have to do. Remember, REITs have to pay out minimum 90% of their annual income in the form of a dividend. So all of this is looking really, really solid, guys. So let's take a look at some of these fundamentals. Increasing net income, guys, of 76% on the 5-year, $318.8 million to $561.6 million. FFO consistently increasing, guys. A little bit of a jump today, but I mean, just look at this amazing increase. $772.7 million to almost $2 billion. Increase of 142% with an average of $1.2 billion. AFFO, we get the exact same thing. Very nice steady increase of 78% from the 5 to the 1 year with an average of almost $1.1 billion. Assets minus liabilities consistently increasing, massive jump 1 year ago, but nonetheless is still looking good. As of today, they have $26.4 billion in this difference. And if we take a look at the average assets minus the average liabilities, we get $11.5 billion. Shares outstanding, however, this is increasing, but guys, it's only increasing by 117%. And you can see that they mainly increased from 2 years ago to 1 year ago. But REITs normally have to increase. Basically, based on the value that you're getting, if that offsets this shares outstanding increases, then I think it's perfectly fine. As you can see, we are definitely getting pretty high increases in their net income as well as FFO and even AFFO. For me to say that 117%, guys, isn't really that much of an increase overall. When it comes to the total debt, guys, they currently hold $16.5 billion in debt, which is an increase of 169% on the 5-year. And now looking into the valuations, guys, if we take a look at the net asset value, which is just taking the current assets minus the total liabilities and dividing that by the current shares outstanding, we get a value of $42.75. This is only one metric, so the current share price being $61.07 is telling me that it is overpriced based off of the net asset value. However, doing the price divided by FFO, guys, this ratio is 20.18. Now, if we take the price divided by the average FFO in the past 5 years, this ratio is now, guys, 32.5, which if today is 20.18 or 20.2 and the 5-year average is 32.5, guys, essentially saying that at the current share price is actually looking fairly cheap. Doing the same thing for the AFFO, the current AFFO, it is 25.33, and doing the price divided by that, we get 34.5. Once again, we see that the current price divided by AFFO, it is lower than the 5-year average. So again, this is telling us that it is a good buy still. Pretty much 2 out of 3 metrics is telling us that it's a good buy, guys. In my personal opinion, with a $61 price tag right now, I think it personally is a good buy. Now, a couple days ago, they went down to 57, and I think the lowest that they were what, 55. So right then and there, you would have been sitting even prettier buying this company at that point. But even if you didn't get onto that, I still think that at around $60 or so, it is a fairly decent price to buy it at. And of course, looking into this dividend really quick, guys, putting in $5,725, this nets you an annual dividends of $279.39. Guys, that's absolutely amazing. I like to buy anything under $279, guys. It is really, really solid. So overall, guys, that pretty much does it for the earnings report for Realty Income. Once again, I love this company. I would love to sell some cash secured puts on this company. Hopefully after next week, I will probably start working towards getting all my companies to the closest share, like to the closest whole share. So that way I can transfer all my stocks over to Charles Schwab. So that way I can start doing some cash secured puts, guys, because I would have loved to sell cash secured puts when it came to Realty Income. That would have been amazing. But anyways, guys, that pretty much does it for this video. Like to feel like, comment, subscribe. It really does help with the algorithm on YouTube. Thank you so much for everybody who have subscribed so far. I cannot believe it. We got a massive jump, guys, in subscriber accounts just today. So thank you so much. Welcome. Hopefully I can help you guys in your investing endeavors. My whole purpose, if you're new here, my whole purpose is to essentially guide everybody through to get financial freedom. That's essentially my whole goal. Freedom is the only reason to invest. That's the only reason why we want more and more money, is essentially not to buy more things, but to buy us the time to then give us more and more freedom. Freedom, guys, it is #1 thing in this world. That's what I personally believe, and that's the reason why I like to make this channel and make videos in how to buy certain companies at a certain point, just so that way you're not overpaying and you get your financial freedom a lot sooner. So thank you so much for everybody who have subscribed. You guys can follow me on my new tech sites, link in the description below. So with that said, peace out, and I will see you all in the next earnings report analysis or stock analysis videos too.